the #1 country for stock market investment. To kick things off, let's start with the United States. The United States is by far the biggest country represented when we look at the global equities market. At the time of this video, the market capitalization of all US companies total $54 trillion. The global stock market currently totals approximately $123 trillion. That means that US companies represent 44%, almost half of the global stock market. No other country comes close to that. And the United States stock market represents very well-known global companies that we're all familiar with. Apple, Nvidia, Microsoft, Amazon. Essentially all the big movers that have been all the focus of much of the growth the past decade. Alright, so how has the United States stock market performed the past decade? Let's do some backtesting. But before we get there, a few things to note about the data that I'll be referencing. 1. For comparison's sake, I'm only going back 10 years. I know it's not a long time, but for some countries I'm reviewing in this video, that is as far as I can go, and I wanted to ensure the comparison was fair. 2. For uniformity's sake, I'm using data from the MSCI indexes, which stands for Morgan Stanley Capital International. They're best known for frequently referenced indexes such as MSCI World Index and MSCI All Country World Index, aka ACWI. Additionally, these indexes mostly represent investments that are available to outside investors. Alright, with that, let's get into the data. According to MSCI USA Index, in the past 10 years, from 2014 to 2024, the US stock market has had an annual average return of approximately 13%. That means that if I had invested $10,000 in 2014 in the US stock market, it would have grown to approximately $34,000 by the end of 2024. More than 3 times its original amount. Not bad. However, one thing to note about the US stock market is that large tech companies represents a big portion of it. Also known as the Magnificent Seven, an homage to 1960 and the 2016 Western film, these are Google, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. And when I say big, they are huge. Just these 7 companies combined have a market cap of close to $18 trillion, similar to the market cap of all public companies in China and Japan combined. And they have been the driving force behind the stock market growth the past decade. Now, the big question for those of us who are heavily invested in the US stock market is this. Will these companies continue to drive growth? Will they continue to be the pioneers of innovation? Or is the healthy run coming to an end? And unfortunately, that is the trillion-dollar question that none of us have an answer to. Alright, moving on to a #2 country for stock market investment. The second biggest stock market in the world, China. While no other country come close to the size of the US stock market, the Chinese companies, one combined, still make up a large share of the global equities market. With a total market cap of approximately $12 trillion, they represent about 10% of the global stock market. One of China's major advantages has been its rapidly expanding middle class, which drove demands in sectors like e-commerce, fintech, and electric vehicles. Companies like Alibaba and Tencent dominate the Chinese digital economy, while firms such as BYD and NIO are shaping the future of the EV industry. Alright, so how has the Chinese stock market performed the past 10 years? Let's take a look at the data. According to the MSCI China Index, in the past 10 years, from 2014 to 2024, the Chinese stock market has had an annual average return of slightly above 2%. I know, not great. That means if I had invested $10,000 in 2014 in the Chinese stock market, it would have grown to approximately $12,000 by the end of 2024. That is pretty much at inflation or less. Why such low returns? While China has experienced impressive growth in the previous few decades, more recently, it had to face challenges such as real estate market instability, regulatory crackdowns, and geopolitical tensions creating a lot of uncertainty and volatility. And we can see this in the data. While the market had a whopping return of 54% in 2017, in the past few years, in 2021, 2022, and 2023, it had a devastating double-digit loss of 21.6%, negative 21.8%, and 11% respectively. Though more recently, it has recovered with 20% return in 2024. No one can say for certain what the future of the Chinese stock market holds. With the second largest stock market in the world, China is still a significant player in the global economy and will continue to be for the foreseeable future. Additionally, the Chinese government has taken steps to boost growth and productivity by reducing debt and investing in innovation and advanced manufacturing. How effective these steps will be in boosting the economy, we will have to wait and see. Before we get into the next best country for stock market investments, let's take a minute to talk about one of the best investments we can make for ourselves. Ensuring that our sensitive personal information online is well guarded and protected. Which is why I'm excited to talk to you about Aura, the sponsor of today's video. Do you want to know a scary fact? Do you know that anyone, and I mean anyone, including you and I, can go to any data broker's website right now and buy anyone's data for a few dollars? And what is even scarier is that this activity is completely legal and is happening every second as we speak. Big companies with poor security are getting hacked every day, and your personal information is being sold on the dark web so spammers and identity thieves can target you, and they face zero repercussions from it. This is one of the main reasons I personally use Aura. Aura does all the hard work of keeping me safe online. They identify data brokers who are selling my information and submit opt-out requests on my behalf. Aura also continuously monitors the dark web and alerts me if they find my personal information being exposed, alerting me if anyone tries to use my personal information to access my credit or bank accounts. Plus, they give me up to $5 million in identity theft insurance should the worst case scenario happen. Additionally, Aura provides VPN with 100+ virtual locations. This comes really handy for me, given I'm currently full-time on the road with my family. So stop leaving yourself vulnerable to data breaches and brokers. Go to my sponsor, aura.com/financialtortoise, and get a 14-day free trial and see if any of your data has been exposed. I'll also include the link in the description below. Alright, with that, let's get back to the video. The number 3 country for stock market investment. Let's talk about Japan, the land of the rising sun. Japan, up until the late 1980s, was a dominant player in the global stock market. It was so dominant that Japanese companies made up 15 of the 20 largest companies globally. However, the asset bubble burst in the early 1990s, and Japan entered a prolonged period of stagnation and deflation. Well, more recently, Japan's stock market has experienced a resurgence. With a total market cap of approximately $6.2 trillion, they represent slightly more than 5% of the global stock market, placing its stock market as the third largest in the world. Additionally, the Japanese stock market consists of well-known and well-established global brands like Toyota, Sony, and Mitsubishi. If you've driven anywhere around the United States, a Toyota is a familiar brand. Currently, Toyota is a best-selling car brand in the United States, with cars like Camry and Corolla as some of the most popular cars sold. Not a surprise given Toyota's amazing reputation for reliability and fuel efficiency. I personally have owned a Toyota at one point in my life, and I can attest to its reliability. Alright, though broadly, how has the Japanese stock market performed the past 10 years? Let's take a look at its performance. According to the MSCI Japan Index, in the past 10 years, from 2014 to 2024, the Japanese stock market has had an annual average return of close to 7%. That means that if I had invested $10,000 in 2014 in the Japanese stock market, it would have grown to approximately $19,000 by the end of 2024. Not spectacular, but not bad either. With one of the world's oldest population and a declining birth rate, the country is experiencing a shrinking workforce. However, Japan is actively addressing these challenges through automation, robotics, and structural economic reforms. How this will play out in the future stock market returns? Only time will tell. But if you want exposure to one of the most developed and advanced countries in Asia, Japan should be on top of your list. The number 4 country for stock market investment. India. It recently surpassed China as the most populated country in the world with over 1.4 billion people. And while its stock market is considered relatively young compared to more established market, it has seen significant growth in the recent years. Today, its total stock market capitalization is approximately $5.6 trillion, making up close to 4.6% of the world stock market. And unlike many emerging markets that rely heavily on commodities, India has a robust mix of industries, including technology, finance, pharmaceutical, and consumer goods. Companies like Tata Consultancy Services and Infosys are global leaders in IT services, while Reliance Industries dominate energy and telecommunications. Additionally, India has a young and growing workforce which fuels the domestic consumption and drives innovation. Government initiatives such as Make in India and investments in infrastructure have further strengthened its long-term economic outlook. Alright, so how has the Indian stock market performed the past 10 years? Let's take a look at its performance. According to MSCI India Index, in the past 10 years, from 2014 to 2024, the Indian stock market has had an annual average return of close to 12.4%. Pretty close to the US stock market, and much better than the Chinese and Japanese stock market. That means if I had invested $10,000 in 2014 in the Indian stock market, it would have grown to approximately $32,000 by the end of 2024. In addition to the US stock market, India's stock market also has been one of the best performing markets globally, primarily driven by strong economic growth, a rising middle class, and increasing foreign investment. And there's a lot of optimism that this could continue in the future. So if you want exposure to the biggest country, and soon to be one of the biggest economies in the world, India is your place. Before we go on, I want to share with you a free gift that I believe could help you in your investing journey. Do you ever wonder what type of an investor you are? Are you a more risk tolerant, or are you more conservative? Or maybe you are more open to the international market, given that we're talking a lot about international market. Well, if you are, you're in luck, my friend. By answering just a few questions in this investor assessment quiz, you can receive a free customized investing plan. It will not only show you what type of investor you are, you'll also get a sample investing portfolio, plus tips to make sure you stay on track to meet your investing goals. So go to the link that I'll have in the description below to receive your free investing plan. Alright, with that, let's get back to the video. The number 5 country for stock market investment, Canada, our friendly neighbor to the north. Now, Canada may not be the first country that comes to mind when we think about international stock market investment, but it has a well-established and resilient market. With a total market cap of approximately $3.5 trillion, Canada represents about 3% of the global stock market. Having a rich supply of commodities, including oil, natural gas, and minerals, Canada is a key player in the global energy and mining sectors. However, it is also known for its strong financial sector and growing technology industry, in addition to abundant natural resources. Major companies like Royal Bank of Canada, Shopify, and Enbridge dominate their respective sectors. Alright, so how has the Canadian stock market performed the past 10 years? Let's take a look at the data. According to the MSCI Canada Index, in the past 10 years, from 2014 to 2024, the Canadian stock market had an annual average return of slightly above 6.4%, very close to the returns from the Japanese stock market. That means that if I had invested $10,000 in 2014 in the Canadian stock market, it would have grown to approximately $19,000 by the end of 2024. While Canada's stock market is more resource heavy compared to other developed nations, its strong ties with the US, stable banking system, and increasing focus on technology and renewable energy makes it a compelling choice for investors looking for additional international exposure. The number 6 country for stock market investment. Alright, let's start getting into our European friends. To kick it off, France. France, the second largest economy in the European Union, boasts a well-developed stock market. With a total market cap of approximately $3.5 trillion, it makes up about 3% of the global stock market. And it is home to some of the world's most recognized companies, spanning industries like luxury goods, finance, energy, and aerospace. Major corporations such as the LVMH, the world's largest luxury goods conglomerate. And if you're married to someone who enjoys a bit of luxury goods, you've definitely heard of the LV bag. Total Energies, a key player in the global energy sector, and Airbus, a leader in aerospace manufacturing. Additionally, financial giants like BNP and AXA further solidify France's position as a critical financial hub in Europe. Alright, let's take a look at how the French stock market performed the past 10 years. According to the MSCI France Index, in the past 10 years, from 2014 to 2024, the French stock market has had an annual average return of close to 8%. Better than Canada and Japan, but still far from the US and Indian stock market. That means that if I had invested $10,000 in 2014 in the French stock market, it would have grown to approximately $21,000 by 2024. French companies face challenges like high labor costs and high taxation. However, because of France's strategic position within the EU, it continues to provide its companies with access to one of the largest trading markets in the world. Additionally, it has made a commitment to innovation, especially in sectors like green energy, fintech, and artificial intelligence. For investors looking for a healthy exposure to Europe, France cannot be ignored. The number 7 country for stock market investment, United Kingdom. Throughout history, the United Kingdom has been home to one of the world's oldest and most influential financial markets. Today, it has a total stock market cap of approximately $3.1 trillion, making up about 2.5% of the global stock market. Some of UK's most well-known corporations include HSBC, one of the world's largest banking institutions, AstraZeneca, a global pharmaceutical giant, and Unilever, a leader in consumer goods with brands found in households worldwide. Additionally, companies like Shell and BP keep the UK at the forefront of the global energy sector. Alright, let's take a look at how the UK stock market has performed over the past 10 years. According to the MSCI United Kingdom Index, in the past 10 years, from 2014 to 2024, the UK stock market has had an annual average return of close to 4%. That means if I had invested $10,000 in 2014 in the UK stock market, it would have grown to approximately $15,000 by the end of 2024. Right around inflation. Yes, UK returns are not as exciting as those of the US or the Indian market. One reason for UK's slower growth is its heavy concentration in sectors like banking, oil, and consumer goods. Industries that tend to be more established, but don't always experience rapid growth. Additionally, uncertainties surrounding Brexit over the past decade created a challenging investment environment. However, despite these challenges, UK remains a significant player in the global finance, with London continuously serving as a major hub for banking and international trade. The number 8 country for stock market investment. Moving away from Europe for a bit, let's talk about Saudi Arabia. Saudi Arabia, the largest economy in the Middle East, has rapidly emerged as the key player in the global markets. With a total stock market cap of approximately $2.7 trillion, it represents about 2.2% of the global stock market. And at the heart of Saudi Arabia's market is Saudi Aramco, the world's largest oil company and one of the most valuable publicly traded companies globally. Apart from TSMC, the Taiwan semiconductor manufacturing company, it is the only other non-US company to have reached the $1 trillion market cap. Other major players in Saudi Arabia's market include SABIC, a leading petrochemical company, and Al Rajhi Bank, one of the largest Islamic banks in the world. Alright, but how has the Saudi Arabia stock market performed over the past 10 years? Let's take a look. According to the MSCI Saudi Arabia Index, in the past 10 years, from 2014 to 2024, the Saudi Arabia stock market has had an annual average return of 8%, just slightly above the French market. That means if I had invested $10,000 in 2014 in Saudi Arabia stock market, it would have grown to approximately $21,500 by the end of 2024. Up to this point, Saudi Arabia's market performance has been fueled by high oil prices, government-led economic reforms, and increased foreign investor participation. However, the government is aggressively pursuing diversification under its Vision 2030 plan, investing in sectors like tourism, renewable energy, and technology. If you're looking for exposure to the Middle East market, Saudi Arabia is definitely a market to keep an eye on. The number 9 country for stock market investment. Coming back to Europe, Germany. Germany, the largest economy in the EU and the 4th largest in the world, has a well-established and highly industrialized stock market. With a total market cap of approximately $2.2 trillion, it represents about 1.8% of the global stock market. Germany is home to some of the most recognized multinational corporations, particularly in the automotive, engineering, and financial sectors. Major companies like Volkswagen, BMW, and Mercedes-Benz dominate the global automobile industry, while Siemens and BASF are leaders in industrial manufacturing and chemicals. Additionally, SAP, a global software giant, highlights Germany's growing strength in the technology sector. So how has the German stock market performed the past 10 years? Let's take a look. According to MSCI German Index, in the past 10 years, from 2014 to 2024, the German stock market has had an annual average return of 4%. Slightly better than the UK market, but worse than the French. That means that if I had invested $10,000 in 2014 in the German stock market, it would have grown to approximately $15,000 by the end of 2024. Despite recent challenges, including supply chain disruptions and shifting global trade dynamics, Germany's reputation for high-quality manufacturing and technological advancement continues to make it a key player in the global economy. Additionally, Germany's commitment to innovation, particularly in areas like renewable energy, automation, and AI, could drive future growth. The number 10 country for stock market investment, Taiwan. Taiwan, despite being a relatively small country compared to all the countries that we've covered so far, it is a powerhouse when it comes to global technology and manufacturing. Today, it has a total stock market capitalization of approximately $2 trillion, representing about 1.7% of the global stock market. And at the heart of Taiwan's market is Taiwan Semiconductor Manufacturing Company, TSMC, the world's largest contract chip maker and a crucial supplier for tech giants like Apple, Nvidia, and AMD. TSMC alone accounts for a significant portion of the Taiwanese stock market value. As mentioned earlier, apart from Saudi Aramco, it is the only other non-US company with a $1 trillion market cap. Other major companies include Hon Hai Precision Industry, aka Foxconn, a leading electronics manufacturer, and MediaTek, a global semiconductor company specializing in mobile and AI-driven chipsets. Alright, let's take a look at how the Taiwanese stock market has performed over the past 10 years. According to MSCI Taiwan Index, in the past 10 years, from 2014 to 2024, the Taiwan stock market has had an annual average return of 14.6%, the best of all the countries that we've covered so far, beating the US stock market by a full percentage. That means if I had invested $10,000 in 2014 in the Taiwanese stock market, it would have grown to approximately $39,000 by the end of 2024, almost 4 times the original amount. That is impressive. Taiwan's exceptional market performance has primarily been driven by the explosive growth of the semiconductor industry, which has become more and more important to global technology, AI, and automation advancements. However, before you think it's all roses and petals with the Taiwanese stock market, you want to understand that it's not all without risk. It not only faces geopolitical tensions with China, it is heavily reliant upon the chip manufacturing industry, and even within that industry, one company, TSMC. So consider those risks when thinking about diversifying into the Taiwanese market. Alright, so I covered a lot in this video, so let me summarize a few takeaways. 1. History does not equal the future. In order to compare each country, I used historical data. Specifically, the past 10-year stock market performance for each country. While this is useful to a point, we want to be careful not to obsess over it. None of us have a crystal ball, and just because a country performed well the past 10 years doesn't mean it will do the same the next 10 years. 2. Diversify. Given that the past performance doesn't guarantee future returns, one of the best ways to mitigate risk, especially risk of investing in other countries, is to diversify. And this is easy to do. With investment products like emerging market index funds, developed market index funds, and total international stock index funds, you can be invested in multiple countries, not just one. 3. Be patient. When investing internationally, it's easy to get caught up in chasing the hottest markets or worrying about every economic headline. Every world event might make you want to sell something or buy something. But be careful. The world is a complex place, and most often, we don't have the full picture when we hear about an event on the other side of the world. At the end of the day, investing globally, outside the US market, can be a great way to diversify and enhance your portfolio. Just don't forget the basics. Keep it simple, stay patient, and invest with a long-term perspective. Thank you guys for watching the theme of diversification. If you want to learn more about how other asset classes perform, please check out my video here on the investment spectrum. Until next time, all the best.